Hey everybody, how are we doing? Welcome back to another ITPM webinar. Can we get a shout out of your location, please, in the Q&A? So you should see a Q&A area on the right-hand side. Okay, wow. A waterfall of locations, beautiful. Nice. Everyone can hear me okay, right? Many familiar names here, fantastic. Okay, we're gonna have some fun today, guys. Relaxed event, Q&A, ask me anything session. Okay, so let's get started with this AMA, guys. I've looked through all of your questions that you sent prior to the webinar. And I've put them into 8 categories, okay? Of course, they don't all fit into every one of those categories, but they pretty much do, the vast majority. So firstly, general and answerable. 2, unconscious. 3, nugget hunting. 4, to do with ITPM strategy, how we actually trade. 5, ITPM admin. 6, alumni. So what I've got to do here, guys, if you're alumni and you're on today and you've asked questions about like content in the online programs, what do you do here, what do you do there, that's not for today, okay? This is a public AMA. Alumni, if you're asking questions regarding that type of stuff, you need to ask those questions in the Discord servers, okay? Number 7, finance career. And number 8, a lot of you are asking about artificial intelligence, AI, how it fits into trading. There's lots of questions to do with that, obviously, because it's very topical right now. Okay, so you can ask questions, obviously, in the live Q&A area. I'll try to answer them as many as I can. Because we've only got like limited time, obviously, if you're asking questions that I just cannot answer, or I don't want to answer because it might take up too much time, right? And then the quality of the question, when I'm answering them out loud, obviously the quality of the question matters because it needs to be useful for other people who are listening, okay? So you can obviously ask questions in the Q&A, of course, Q&A area on the right-hand side. But I'm obviously not going to be able to answer every single question today. I'll try as much as I can to cover as many good questions as I can, okay? Right, so here's what we're going to do first. Let's have a little bit of fun, right? Let's go to unconscious. Does everyone understand what I mean by unconscious questions? If you don't know what it means, then shout in the Q&A and I'll cover it. But basically, unconscious means, okay, so we have like a hierarchy of consciousness when it comes to any skill set, whether it's driving a car, playing chess, playing a sport, whatever, okay? Basically, the bottom of the pyramid is unconsciously incompetent. Basically, what it means is that you're so new to something, you don't even know what you don't know. So you're basically unconscious and incompetent, okay? Then the next level is conscious incompetence. So basically, you are aware of what you don't know, but you haven't really done anything about it yet, okay? Then the next level is consciously competent. Consciously competent. So now you're competent, you've got skills, you know what you're doing, but you need to practice, okay? And then the top is basically professional standard, okay, in any skill set, including trading, right? So it's unconsciously competent. You do it with your eyes closed without thinking about it. Now, what's at the bottom of the competency hierarchy for trading? It's basically retail individuals that have no idea how financial markets really work, but they think they do because they've been given messages. Maybe you watch mainstream media, you get told things that aren't true, you believe things that aren't true. So for example, like, okay, this is what a trader does, and that person has a conflict of interest. So now you think that's what traders do. So then you make all those assumptions before you even ask a question. So stuff like this, right? So let's go through these. And, this is not to pick on anyone, by the way. Everything we do as a school is in the spirit of educating, okay? What I'm trying to do here when I go through stuff like this is to show everyone on the webinar the messages and the understanding of trading that is just wrong, okay? And you should learn something from this, okay? This is why we're here today, to learn from all of these questions in the AMA, okay? So let's start at the top here. What is the best industry in which a young entrepreneur in the mid-20s can make 25 to 50K, so then you can start trading after? Okay, dude, you are literally asking me how to make money doing anything. Okay, I read that and I was like, start an OnlyFans. I don't fucking know. Like, do anything to make money. Like, if you need to, right? Can I start with less than 15 to 25K if I'm not using options for trading? So you're basically trying to argue with what we always say in order to do this properly, which is you've got to have a minimum amount of money to do things, right? It's an unconscious question because you're just arguing with the facts of reality. You need a certain amount of money to trade to do it properly. We're not lying to you. And if you're looking for shortcuts, it's an unconscious way because you actually think that there is a shortcut, okay? How much time is optimal to achieve financial success as an entrepreneur? I mean, that's such an unconscious question, right? Because you're basically just saying, in business, how much time do I need to make money and become successful? How long's a piece of string? And also a long short portfolio manager. I mean, that's not an unconscious question, but that is more a timing in terms of like, how do you become unconsciously competent at trading? It's going to take a year to 18 months. Okay. Right. Next one. And I've taken second names out, by the way, because I'm not embarrassing anyone. Next one. Buying calls with 90 to 100 days till expiry. Okay. So what happened to puts? You just in call options. What happened to put options? Okay. Unconscious. Okay. Buying call options with 90 to 100 day till expiry on growth stocks with average volume higher than 5 million. Is this viable long term? That's unconscious because you're making the assumption that volume is important for you as a strategy to buy call options. Of course it isn't. It's not at all. No one cares. Gerard, what are the key indicators to look for when you're looking for an up-and-coming company to invest in, e.g. long Palantir? So that's unconscious because you actually think there's like a few indicators that you need to look at, and then you'll know what's going to be the next big stock to buy, right? Of course not. There's a lot more work that needs to be done than that. Hi, Anton. Is dark pool data reliable for 60 days? What's the way you trade? I think you're asking. And I use technical analysis that scan institutional exhaustion and momentum failures on multiple time frame. Okay, listen, like none of this is going to make you money. Okay, so again, this is the unconscious approach. Like you actually think dark pool data. You're asking if it's reliable, which means you're assuming that dark pool data is somehow useful for retail traders. It's not. It's completely useless. I use technical analysis that scans institutional exhaustion and momentum failures on multiple timeframes. Useless. Like if an institution is doing something and you're guessing what they're doing, that's not a trading strategy. Okay. So again, it's unconscious because you actually believe it is for some reason. Like your belief is embedded in that question. Next one. What role does the order book play? None. I've not looked at an order book since I was a professional trader at JP Morgan. Right? It's like it's completely useless. Like if I'm deciding whether to go long or short a stock, the order book doesn't mean anything. It just literally doesn't mean anything. Why would I like if a stock is like $50.65 on the bid and it's $50.66 on the offer? Why would I care if there's a guy offering stock at $53.74? Why would I care if that there's a guy bidding $49.75 for stock? So if I go down the order book and I see that there's someone there, it makes no difference at all to whether I buy or short that stock. Okay. So again, this is unconscious because you actually believe this is something that matters, right? And this is one of the problems with retail trading is that you get fed so much bullshit and nonsense on the internet these days that you end up bumping into something that sounds plausible and sounds reasonable, and then you build years of strategy around it, and it's all completely useless. So what happens is that you end up just circling around at the bottom of the pyramid, being unconsciously incompetent. And this is like exactly what I'm talking about. Next, if I'm 1 month into a 4-month trade expiry and already 60% up, do you think it's best to set up a stop loss or wait for further catalysts? Okay, so what you're basically doing here, this is a massive retail trader error. Okay, you're looking for a rule from one specific situation that you've encountered, and then you're going to take that rule and then apply it to everything else for the rest of your life. Trading doesn't work like that. So essentially what you're doing is you're adding 2 and 2 and getting 5, which is you're trying to take a rule from one specific situation, then apply it to all situations throughout time. That's not how it works. So you're looking for a rule book. You're looking for a rule book. A rule book implies that something is going to work every time, or it's like a guarantee or a shortcut. It doesn't happen in financial markets. Okay, you need to be flexible. Joseph, do you trade short term? Basically, he's asking me if I'm a scalper. No, of course not. You can go online and like watch 5-10 minutes of our YouTube channel and realize that we're not scalpers. Okay. What's your take on selling options or running the wheel strategy in the long run? Complete nonsense. That's not a trading strategy. Okay. So the basics of a wheel strategy, if I'm remembering correctly, is to sell cash secured puts. And then if your puts are in the money, you take delivery of the stock and then sell a call option to put on a covered call position. That can just go wrong massively very quickly, right? Because you're basically selling puts usually in stocks out the money, and you've got no fucking idea why you're actually looking to sell puts in that stock. And then when you actually end up long the stock, you then write a covered call, and if the stock just keeps going down, you lose a shitload of money. It's a really stupid thing to do. What is the best trading approach for those who have less than $500 to trade with? Give up, make some money and come back. $500 is a ridiculous amount of money to start trading with. It's just gambling. So again, this is all unconscious stuff, right? It's like this guy, Karim, he's been told that this is a good strategy, but he can't figure out that it's not a good strategy because the reward to risk is just terrible. What is the best trading approach for those who have less than $500? Yeah, this guy thinks you can actually trade with less than $500. Otherwise, he wouldn't ask the question. So very unconscious. Can you still day trade even if you're running a 1 to 3 month long short portfolio? Yeah, you can, but it won't work over time. Again, asking the question, thinking that day trading is a viable strategy for him because he's been told 1,000,000 times that it is. It's not. Do the IPLT video series with us. You'll realize we prove it statistically that it's not. Okay. I think this guy is asking about prop trading firms. There was a few questions about prop firms. Guys, they're all a fucking scam. Okay. You do your little stupid gay challenge on the fucking website, right? And you can take it as many times as you want and pay them as many times as you want to take the challenge. And then you can pass the challenge on attempt 24. Okay. Does that make you somebody who's got the ability to trade? Obviously not. Then you trade a fund, what they call a funded account, but the money isn't fucking real. It's a fictional number on the screen. It's a demo account. Okay. And then people wonder when they become the 1 in 300 guys that actually make some money from that demo account, why they don't get paid out. Because the money isn't even real. It's a scam. Okay. Again, very unconscious. What's the best platform to trade, and is it user friendly? Again, unconscious. One, he thinks that the platform is going to make you a good trader, and that if it's more user friendly than not user friendly, it's going to make you an even better trader than that. That's retarded. Like, of course not. Like, the platform isn't going to make you a good trader, and the platform being user friendly or slightly unuser friendly isn't going to improve your ability to trade. Okay. The platform is just for execution. You just need to use it to buy and sell. Why is it important for a retail trader to have some money? Fuck me. Why is it important if I throw you in a swimming pool to have some arms and legs? Because you need to swim. Okay. Why is it important for a retail trader to have some money in order to start trading? Also, do you approve demo account for the first month? Listen, demo accounts aren't going to help you become a good trader. I think here you're basically just asking, can I use it to just like learn the platform to like place a trade? Yes, learn how to place a trade. That is like less than 1% of what you need to learn. Okay. Retail traders worry about the things that really don't matter, right? It's not whether you can buy and sell something. It's whether you should or not, right? It's like you got to figure out how to become good at knowing what to buy and sell, not whether you can. Just because you have access doesn't mean you're good. Okay. Again, it's 2 + 2 = 5. Olga, how to know that a company stock is going to go up or down after a long downside or upside movement? I mean, again, this is like looking for a rule where you just grab some indicator and say, I'm just going to use that indicator when a stock goes down, and then I'm going to know if it's going to go up. In every situation, forever. It doesn't exist. It doesn't exist. But obviously embedded in that question is a belief or assumption that it must exist. It doesn't exist. Is seeking alpha a good source for idea generation? Okay, that's a problem question, unconscious, because you assume that copy trading is the way forward, is a viable strategy for retail traders. So you're just going to go on a website, there's going to be some ideas there, and you just copy them, put the trades on, make loads of money, and then retire with multi-millions of dollars. No, not going to happen. Can you make money day trading with leverage prop firms? No, they're scams. And also day trading is a joke, right? Like I don't care what anyone says. I know the success rates of day traders over time. Why would you play a game where it's 99% against you? 99% odds against you guys. Are we able to tell if the market is heated just by looking at the SPY? No. What's the best route to join the financial markets? Is it Forex or options trading? Again, that's an unconscious question because you just think it's one or the other, right? There's many ways into financial markets professionally, okay? How can I scale up my trading? Make loads of money. That's how you scale up your trading. How to gain 66% in a year. Not 67, not 65, not 77, not 75, but exactly 66. Fucking hell. Hey, Anton, do trading sessions work when trading gold? Gold, I believe gold is one of the most traded commodity, and according to my chart observations, it looks like gold has high volume. Okay, again, we're equating volume with success. Volume and success are not the same thing, right? You don't get success because something trades a lot of volume. That's the wrong way to think about financial markets. How do we hedge against Trump ever changing a decision? Unconscious, you can't. How much of your portfolio is invested in AI stocks? You're on the wrong webinar, dude. I'm not an investor. I'm a trader. How to find profitable stocks and where to invest? Again, we don't invest. Investing and trading is very different. For some reason, retail traders confuse the two. They think investing and trading is the same. It's not. How to think wisely about the defense sector investments globally 1 to 3 years forward. Again, you're on the wrong webinar. Okay, so there's always one guy that comes in to webinars like this and then defends day trading. So there's a guy here who says, Anton, I'm surprised that you say day trading doesn't work. Why? It's proven statistically not to fucking work. How can you be surprised about somebody throwing facts in your face? Okay. And then he says, when I know lots of successful day traders with a proven track record, okay, I'm going to give you the benefit of the doubt that you know some. So what? I don't care. Just because you can point to one person or 3 people that you know have made some money day trading over a specific period doesn't mean that day trading works overall. You do understand the statistics, right? It's a 99% failure rate. Why would you play that game? It's fucking dumb. It's completely dumb. Then to defend it by saying, I know one guy that does it well. So what? So what? It's not a solution for retail traders. Okay, retail traders don't trade full time. They're not sitting in front of their screens all day. And even if they were, they still have a 99% failure rate. So what's your fucking point? I know one guy. I know 3 guys. I'll give you the benefit of the doubt that maybe you do. So what? Come back to me with a response. I want to see the response. If it was viable, I would be doing it myself. Of course I would. Right, next. What percentage of candidates that join the course, I think that's supposed to say consistently make money 1 year later? Okay, I've put that in unconscious because I know what this guy, he's trying to get an answer where, let's say I say 60% of our guys who do programs, a year later we check in on them and they're making money, right? He would think that means a couple of things. One, he would think that means we have a 60% success rate. No, it doesn't. It doesn't, because we can check in with them after 8 months and it can be 70%. We can check in with them after 18 months and it's 50%, right? It goes up and down, it oscillates. Also, he thinks that there's no drop off for some reason. So, we are public facing with retail traders, right, as a school, which means if we take in, say, 40 traders on a mentoring program, you check in 1 year later, how many out of the 40 do you think are still trading? Exactly, right? So there's different ways of looking at it. You can look at it as the guys who continue, if they decide to continue up to 1 year, what percentage are making money? The guys who continue, the percentage is very high. The other thing that this question asks, and this is always where the unconscious element comes in to this question, is he thinks that number means that it's his percentage probability of making money or not after 1 year. Obviously it isn't, because you could just be really dumb. You could just be really lazy. and do no work. If you're really dumb and really lazy and you come to ITPM, it will be very difficult for you to succeed. And then will you still be around after 1 year? Probably not. So you can't equate that number. If that's what you're getting at, this is where usually why people ask this question. They think that's their probability of success. Again, you're adding 2 and 2 and getting 5. It's not for your personal situation. It doesn't have any bearing on your own personal situation. But generally speaking, if you're quite smart, you do a decent amount of work, and you keep working hard over 1 year, it's actually very, very difficult to fuck it up. It's difficult to mess it up. Okay. Yep. Again. Okay. So this guy's come back again with the day trading. This is what they always say. I mean, you might as well go to the fucking day trading textbook answer to everything, right? I understand what you were saying from a retail trader perspective. They don't sit in front of the computer all day and they have a job. Yes, dude. Even the guys that do, the success rate is tiny. It's 99% failure rate, even if they do. And then he's saying, but if you're a full-time trader, if you have an edge, there's no edge. This is one of the biggest lies of day trading. There is no edge as a human in day trading anymore. Okay. Check in the 1980s and 1990s, maybe. There's been no edge since the 2000s. It's a lie. You don't have any edge. Okay. The fact that you've said that makes me know 100% that you have no idea what you're talking about. Come on. Yeah, someone's asking, like, why are you arguing with a guy who thinks day trading is viable? I need to do this out loud so you guys understand. So everyone on the Q&A AMA today listens and understands. Okay. Okay. Next, Jahid. No formal higher education, but I'm financially literate and I manage a £5,000 trading account and hold £15,000 in Bitcoin. Okay. Someone tell me in the Q&A area why that's an unconscious question. I'd like to hear your thoughts. We won't spend too much time here. We're nearly done. Then we'll move on to other stuff. Okay. Someone said not enough money. Someone said he thinks £5,000 is enough. LOL, Bitcoin, no process or view. It's too specific. Okay, let me tell you what a professional trader thinks of this question. I have no formal higher education. And then he makes the claim that he's financially literate. Okay. Then in the same sentence, he says he's managing £5,000. How can you claim to be financially literate if you're managing £5,000? That's crazy. Okay. Trading index CFDs. Okay. I mean, index CFDs, you're going to be like on leverage 8 to 10 times, something like this, and £15,000 in Bitcoin. I've got news for you. Unfortunately, I'm just going to be very honest. Okay. You are not financially literate. Please. Now, I know at the end here, he's asking, do I continue in this manner or pursue an education? You need to pursue a proper education to become financially literate. Okay. Because you're nowhere near where you need to be able to claim that you're financially literate. Okay. Is the VIX behaving correctly lately? Why would you think that there's times when it doesn't behave correctly? Again, unconscious. It's just assume that it's correct all the time. And then you have no edge over, as a trader, you have no edge over deciding whether the entire S&P 500 is priced incorrectly or wrong, and volatility of the S&P 500 is priced incorrectly. Just think how absurd that is, right? A retail trader sitting in their basement at home somewhere in the world decides that the S&P 500 VIX is priced incorrectly. That's mental. That's mental. Okay. Last one before we move on. I've heard you say you should not trade for income because it makes you take on excessive risk. But separately, I've also heard you say that if you are trading an account of $1 million, that you should do it full time. No, you've misheard me. You've misheard. I'll be more specific. So is it that you should not trade full time? Okay, so basically, when you trade in the way that we trade, which is probably one of the most optimal ways a retail trader should trade. Okay. You definitely need to have a day job and an income coming in from that day job up until between $1 million and $2 million. So this is not static, it's dynamic, right? We live in a dynamic world. Okay. So let's say, for example, you put 100 grand in a trading account at ITPM. In your first year, you make 150 grand, your account goes to 250, you put in another 50 or 100, you grow it in year 2 to like 700, and then year 3, you're going through 1 million. Okay. Now, you're not just going to close all your positions when you get to 1 million and then go and see your boss and say, I quit. That's what people think is what people do, right? You don't. Obviously, it's dynamic, right? Somewhere between 1 million and 2 million, you can quit your job knowing that you're actually very good at what you're doing. But there's a condition. You should have another income stream coming in. So whether that's, you've got an apartment that you rent out for $4,000 a month or whatever, you've got some sort of income coming in, passive, that you don't need to worry about your day-to-day living expenses, okay? Because you don't want to take money out of your account if you don't have to pay for bills, okay? You don't want to be paying your mortgage from your trading account. You don't want to be paying your car payments. You don't want to be paying your kids' education, private school, whatever it is, from your trading account. All of that is just stupid, right? Don't pay your medical insurance from your trading account. All your big expenses, utilities every month, all your big expenses need to be taken care of. Okay. So, unconscious questions. We have to go through them, guys. I'm sorry. I apologize, but we have to go through them. Okay. Because it's very important for retail traders to see this stuff, to understand that there's a wrong approach to thinking and there's a wrong approach to doing things in financial markets. Okay. And there's reasons why, and it's not always your fault. There's a lot of media and brainwashing and bullshit out there. If you've got a full-time job, you run a business, you've got a family, you've got hobbies and interests, there's only so many hours in a week, and in those in those hours per week that you have off, okay, you're putting on media that is selling you nonsense when it comes to financial markets and trading. Okay, there's a lot of conflict of interest around, and a lot of it is bullshit. Okay, like the day trading one is a classic example. It hasn't worked for 20 years. 20 years. Okay, it's been on the decline as a profession, right, within financial markets. Being a professional day trader, it's been on the decline for 20 years. Okay, and people still believe now that it works, that it's a viable strategy. Now, if you've got a ridiculous quant model and your Renaissance technologies, then yeah, like scalp away to your heart's content, 20,000 trades a minute, beautiful, right? But you can't compete with that as a human, especially if you're retail. Even if you're a pro sitting in like a trading room somewhere. The turnover is huge. It's huge. Okay. So someone might have a good patch for like 6 months, a year, then they'll do nothing for years and they'll just struggle for years, right? And then they might have a good patch again. Just because they had a good patch doesn't mean long term it's a viable strategy. Okay. Good strategies stand the test of time and they make money in all different markets. Okay. Let's have a look at strategy. And let's go from the bottom. Let's go from the bottom. So how to maximize wins and minimize losses in the long run. Well, so what we're doing here, guys, we're looking at, I put this in strategy as a category because really it's answered through the lens of ITPM strategy. Okay. So how to maximize wins and minimize losses in the long run. Well, the answer to this really is to have reward to risk skewed in your favor. Okay, so it's really a preventative risk management approach. Okay, so the best answer to that question is options. Okay, so you have asymmetric reward to risk. So your risk is just the premium you pay, but you can make significantly more on the upside than if you had the same position in a stock, right? So when you swap a stock position for, say, a call option or a put option position, the downside is defined like you have in a stock. Okay. So if you buy a stock and it goes to zero, you know how much you can lose, right? It's just whatever you bet. Well, it's the same in an option. The downside is the same 100%. Okay. But your upside is far greater for the same amount of dollars because you're getting leverage on the upside of that call option. Okay. Now think of a put option. Your put option is downside 100%, but if you were short a stock, your downside is infinity. Okay. So you're now flipping the reward to risk metrics. So if you're short a stock, your downside is infinity and your reward is 100%. With a put option, your downside is 100% and your upside is not infinity, but it's a huge amount of money potentially for the same amount of dollars that you would short a stock. Okay. So what you're doing is you're introducing asymmetric reward to risk into your strategy. Okay. And that's why we trade options. That's the beauty of options. Okay. So when you ask the question like how to maximize wins and minimize losses in the long run, preventative risk management, and it's built into the structures of the options that you trade. And it's built into options full stop, right? Let's see here. Next one. This is a long question. My primary goal is to protect my capital. Yes, that's everyone's primary goal. Could you tell me what kind of structure, procedure, or guidelines you would suggest for someone like me in order to develop a methodical plan that strikes a balance between steady growth and moderate risk exposure? Well, yeah, I mean, what we do as ITPM in terms of strategy, long short equity options portfolio management, 20 to 60-day time horizon, diversified portfolios. So your downside, because we're using options and we're very diversified, is very, very small, and your upside is explosive. And all you have to do is learn how to manage that risk and come up with good trade ideas. It takes time, but the growth is incredible. When you know how to do it, you've seen the numbers from the Thailand guys. How to build a solid trading plan with trading data sources. I mean, our two online programs, PTM video series and POTM, that's your trading plan. That's a very solid trading process. It's like step by step by step by step all the way through. How to find the best shorts in a bull market. I mean, this is an ITPM strategy question because we literally teach you how to do that. So it's the fundamental approach. Okay. What you're typically looking for is X growth situations in a bull market. So for example, like right now, I think Jason is going to do a flash episode on this coming up very soon. Looking at, if you look at, for example, software as a service, SaaS stocks, the whole sector got pretty hit hard in the first couple of weeks of August. If you look at the bellwether, CRM, Salesforce, it's basically flat now since 2020. So the stock hasn't gone up in 5 years. Okay. It's in what we would call phase one of going X growth. So if you go through the ITP, it's basically fundamentally driven. Okay. I should be back. Hold on. Yeah, I think my internet froze for a second, but I should be back. Am I back? Okay, back. Yeah, if it goes off again, guys, it'll just be a pause for a second. And if I have to leave the room, then I'll just come back in. So don't worry. If there's a tech problem, I'll come back into the room. Relax. It's just when you're flying solo, sometimes these things happen, right? Okay, so people are asking, repeat the last 20 seconds. Okay, so we're talking about CRM, Salesforce. Okay, phase one is basically, if you look at a 21-year chart of Salesforce, it goes like this, right? And then the last 5 years, it's gone sideways like this, up and down, up and down. And then it's just breaking to the downside now. Okay, now the reason it's doing that is not because of technicals, right? You don't look at a chart and go, oh, look, it's breaking. That means I should be short. No, like that's not how you generate a trade idea. The chart is simply the pictorial illustration of the fundamentals. Okay, so the fundamentals are driving the price. Okay, and when a stock has earnings growth and revenue growth like this for a very long time, and then that growth tails off, you have what we call a phase one drop, where basically institutional money starts coming out and rotating into areas of the market where the growth is at the beginning phases or the middle phases, not the end phase. Okay. So SaaS is going through CRM. It looks like it's going through the end phase of their growth. And it's all to do with AI, right? Because basically they're investing a lot of money in AI agents for their clients, which is counterintuitive because they're firing people themselves, they're reducing headcount, their revenue growth has slowed down a lot, earnings growth has slowed down, they're investing in AI agents, so they're asking their clients to do the opposite of what they're doing, right? Don't invest in AI agents and don't reduce your headcount. Well, obviously not. They're going to do what they're doing, right? So it's not looking good for software as a service. So these companies, they are AI. If they invest in AI, they're just cannibalizing their own businesses, right? So if they invest in AI agents and give them to their own clients as part of their Salesforce offering and their product, what does it mean? Well, it just means the guys themselves can just build their own AI agents internally and reduce their headcount. They'll just do exactly the same as what CRM have done. So they're putting a brave face on it, and they're investing billions in AI agents because they've got no choice. It's a desperate move. But longer term, this is not good for software as a service and CRM as the bellwether. So yeah, how to find the best shorts in a bull market? Look for X growth. But you've got to know what you're looking for, right? So this is why it's so important to get educated. How best to manage risk in a volatile market? Diversified portfolio, own lots of put options. So you got lots of long ideas, you got lots of short ideas. So you know what's quite interesting? The last phone call I did with my students on my mentoring program last weekend on the Thailand program, there was a number of them that didn't have enough put options. So we looked at, for example, a slightly out of the money hedge using the Russell 2000 IWM. Okay. and we found one that paid us 7-1. We found a vertical spread in January that paid us 7-1. So a bunch of them put it on. Okay, so next question as well, like how to play possible incoming risk off market. Again, like our job as traders, so long short equity options portfolio managers, it's not to be dogmatic and to be all one way. So if we're bullish, we're not thinking to ourselves, let's just buy lots of call options and go long. That's not how it works. We don't think that way, right? Let me tell you how we think. We think, okay, do I have enough puts in my account where if the market went down when I didn't expect it to, that I own puts in the right stuff where when the market goes down, they go down a lot and I make a lot of money when the market goes down. Do I have that exposure in my account or not? And if I don't, why not? I should have, right? And I'll tell you why. Because if you want to be bullish, as a risk manager, as a responsible custodian of capital, as a portfolio manager of your own money or someone else's money, okay, you are not allowed to be bullish unless you have protection. If you have enough puts in your account, then you have full permission to be bullish. Do you understand how that works? If you don't have protection, you have no right to be bullish. That should make sense to people. Because if, for example, you own lots of put options and lots of call options and you're bullish and the market goes up a lot and you have to write off your put options, guess what? The downside on your put options is 1, but the upside on your call options is 2, 3, 4, right? That's how it works. But if you're long lots of call options and you don't have any protection, and then the market just goes down 5, 10, 15%, like it did in April with the tariff week, okay? If that's the situation, what do you think is going to happen to all your call options? They all end up out of the money, and all your call options are a write-off. So then your account takes a massive hit, okay? And then you're in what would be considered an irrecoverable position, an irrecoverable situation, okay? So yeah, these questions here, best way of hedging in market pullbacks. This is why we have well diversified long short accounts, okay? Because we make money when the market goes up and on the way down. On the way up, we make more money than the market goes up because we're trading options, okay? So maybe we're writing off puts and selling out of calls, okay? And then when the market goes down, the market obviously goes down and we make money. So that's where we get a big outperformance, a big divergence. So again, look, what is the strategy for the correction? Best way of hedging pullbacks. Best way of hedging pullbacks is not just to buy generic hedges all the time, right? You only buy generic hedges really when you've got no short ideas. And you should be good at generating short ideas if you trade the ITPM strategy. What is your exit strategy on your positions? Calm and relaxed and patient. So scaling is the normal way to exit positions. Exit winning positions, okay? Risk management for swing and position trading, how to be profitable in the long term and become a full-time professional trader. Okay, so you're getting a bit ahead of yourself there. But risk management for swing and position trading. Again, the approach of preventative risk management with options, it's embedded. The risk management is embedded into the financial instrument. How to be profitable in the long term. Good ideas, good option structuring, good risk management. I mean, I'm sure you're probably asking here this question, asking for genuine specifics where I'm going to point to like 1 or 2 things and say that's exactly how you do it. But it doesn't exist. It's a mixture of things. So maybe that's a slightly unconscious question. During your top-down and bottom-up analysis, when coming up with ideas, how far ahead do you try and predict the future? Maximum 3-4 months. Maximum. I don't try to kid myself and pretend that I know what's going to happen beyond 4 months. Can have an idea, but I think if you go out more than 6 months, it starts to become a coin flip in terms of the macro, right? It can go either way. What is most important in your weekly routine of things you need to do to stay in motion? Well, every week, and actually the guys on mentoring programs will tell you this, we go through the same process that we teach on mentoring programs, which is you're scanning through all of your positions and you're recalibrating your exit strategies on winners and your losers and how you're going to book net profits, right? So you're going through every single one and having a weekly plan. And then you're obviously exiting positions. We exit positions on a weekly basis. Sometimes on every 2 weeks. How can I figure out what trading time frames will suit me best? What are your thoughts on how trading time frames? Okay, so here's the thing, right? You're looking at this the wrong way around. You're looking at it and thinking, okay, I'm going to go into the market and tell the market what time frames suit me, and then I'm going to trade it and be profitable. If it doesn't work, then it doesn't work. Okay, so like for example, this conversation we've had on day trading and short-term trading. Why would you play that game when you know the odds are massively stacked against you for medium to long-term success? So if you say I'm suited to shorter time frames, so I'm going to do it. Well, that's just silly because it doesn't matter what you think you're suited to. What matters is what works. Okay. Now, saying that, if you're in this what we call the sweet spot, which is the 20 to 60 day time horizon, if you learn that first, then you can experiment later by going a little bit shorter term or a little bit longer term. But bear in mind, if you go beyond 60 days, you're now in the gray area where you're going into what we call investing. Okay. It no longer becomes trading. So I would say learn the 20 to 60 day time horizon because that's the sweet spot. That's where the most money is consistently made. Okay. That's how you consistently take money out of the financial markets in the 20 to 60 day time horizon. Then you can experiment with shorter term. But you're going to find that the shorter term you go, the less success rates you have. So if you start trading like 1 week swing trading, it's going to be less successful than 20 to 60 day time horizon over many trades over a long period of time. Of course, you'll have times when you make money, but that's not what matters. What matters is consistency over time. Okay. And you're going to have to work harder for those dollars because you're going to have to show up a lot more. How can one learn and start trading with a greater success rate if you've never done it before? Yeah, you've got to start from the ground up. I mean, you're basically admitting in that question that you're what we talked about earlier, unconsciously incompetent. So like you don't know what you don't know. So how can one learn and start trading with a great success rate? You're not going to start with a great success rate unless you're doing a fairly successful mentoring program at ITPM. And then that really doesn't count too much because then you have to go off by yourself and do it alone. And that's really the start of your journey, right? When you go off and do it yourself alone, because this is a business of self-sustainability. You can't rely on other people to make the money for you. You have to make the money yourself. Okay. You can be taught, mentored, and learned how to do it, but ultimately you have to go off by yourself and do it properly for yourself. So when you say, how can one learn and start trading with a great success rate? You can start off well with a good mentor and obviously like a strategy that actually works, right? But then ultimately you've got to go off by yourself. And that's where your learning really starts, because then you're going to have to learn how to do it for yourself. And that is a different ball game. Okay. what it takes to be a consistent, profitable trader. Oh, many, many things. So it's the whole process. It's turning up consistently yourself. Consistent input equals consistent output. I would say, a good question that actually no one asked at all. A good question that we sometimes get is, what is probably the biggest reason for people failing over the medium to long term as retail traders implementing the ITPM strategy? It's not showing up. So, if I do a mentoring program with someone and then I let them go after week 12, and then they trade well for a month or two, and then something happens in their life and they stop coming up with trade ideas, they get distracted, they put less hours in. You check back 6 months later, what's happened to that guy? Well, they've deviated off the path. They've stopped showing up. They've stopped being consistent with their input, which means, unfortunately, in trading, your output becomes bad. If your input is inconsistent, your output is not consistent. Average hold time for positions taken around 20 to 25 days. How to generate a trade idea. It's in the PTM video series. We have a template and we have, I think, 12 videos that teach you exactly how to generate trade ideas. What is the best way to create wealth in options trading? And what are the necessary attributes one must possess? Okay, this is actually, for me, on the surface, this question looks so innocent, right? But it's quite deep, right? So, what is the best way to create great wealth in options trading? Okay, don't do what professional options traders want you to do. Like what I mean by professional options traders is really the market makers. Okay, what's the stupidest options trade you'll ever do? Let's have a Q&A in the Q&A area. If I ask you, what do you think is the most stupid options trade you will ever do? What would you say is the answer? Yeah, so everyone got this one quite easily, right? So, okay, some people are mentioning 0 days till expiry. Yeah, that's completely retarded, of course, right? Yeah, naked shorting options. So a naked call or a naked put. Okay, that's a really stupid position. Okay, but what's the most common situation that we see? Okay, so let's say, for example, on Robinhood, what are the guys on Robinhood and Wall Street Bets? What are they all doing? What's the trade they all do, essentially? So they're buying call options, and it's mostly YOLO. Yeah, Adam's got that one, YOLO. But what does that involve? It usually involves buying something that's like fairly short dated. So maybe like a month or 2 months till expiry. And then it's way out the money, like 20% out the money or something, 20% plus out the money. So think about it like this, right? Just think, okay, a $200 stock, right? And I go and buy the 204, let's say it's now August 22nd. And I go and buy the October expiry $240 strike call for $20. My break even is 260. Okay. So I need the stock to go to 260 by October expiry to break even. But what's my 3-to-1 reward to risk? What's my 3-to-1? So I need the stock to go $80 through my strike. So you just do 20 by 4 and then add that on. You need the stock to go to $320. Okay. So for guys like us, that's just completely insane. Like we would never do that. Now, what's a What's an ITPM or more sensible, more consistently profitable approach? What on that $200 stock? What would we do? Very, very different. What would we do? Let's have a guess. So yeah, Peter said at the money or close to at the money calls. That's half the story. That's half the story. So I'll tell you what we would do. We would buy maybe the December $210 strike calls. Okay, so maybe slightly out the money. But at the same time, we would short the option that the retail traders are buying. So we'd set up a calendar spread. We'd sell the October 240s to the dumb retail traders. And we do that on a ratio. So maybe we do that on a 2-for-1 ratio, where we buy 2 contracts of the December 210s and sell 1 contract of the October 240s. And we'd set up a $20 credit. And that $20 credit is very high probability. Okay. Now, in the short term, in September or October, if the stock did go to 320, we'd still make money. Why? Because we're long 2 contracts of the 210. We'd be $110 in the money on the 210s. Okay. Obviously break even higher, but we'd be down $60 on the short. And we're short 1 contract. So we're long 2, short 1. If the stock just went to 320, we make money as well, right? But if the stock is below 240 by the October expiry, or 240 or below, we make $20. If the stock's 250, we make $10 on the short, right? We shorted it at 20. Okay. So we're going to get a credit. Very likely we're going to get some sort of credit. Okay. The point is this, guys. There's 2 things going on there. Firstly, we are trading with the odds in our favor that we're going to make money. Secondly, the risk of that setup. What's happening there? We are agnostic till October. If the stock is 240 or below, guess what happens? We take the full credit. If the stock is 250, we take a half a credit. Okay, we make $10. If the stock goes to 320, we make money. Between now and the October expiry, we cannot lose money. Do you understand? We're agnostic. The stock can go up, down, sideways. It can do whatever it wants between now and October. We're going to make money in October. Now, if we have the scenario where the stock goes to 320, we trade out, we make money. If the stock is 240 or below and we get the full credit, we run the long. We've now lowered the price of the trade. We run the long. Then the stock can go up as much as it wants, right? So yeah, Aaron's saying you've essentially planned for all outcomes. Correct. So obviously there's the outcome where by December expiry, the stock is below 210. The long contracts become a write-off. But guess what? We took the credit in October, so it's cheaper than if we'd have just bought the 210s. And it's better than buying the 240s. We had a better chance of making money that whole period of time, right? So we're trading much more efficiently. Now think about it in terms of the risk. We are agnostic in that situation. When the market maker shorts that 1 contract to a retail trader for $20, the 240 strike call in October, what's the market maker doing? What do you think the market maker does when they short 1 contract of the 240s? Yeah, Peter says he laughs. Absolutely. they laugh their ass off because they think, how can people be so stupid to buy this contract? So yeah, Eric, that's one thing they can do. So Eric is saying they buy the contract back to get to neutral. Yeah, they can do that if it's still trading at the same price and they get the liquidity to do so. They would probably much rather do that. But let's say there's a whole bunch of Robinhood nut jobs that all come in at one time. Right? Let's say 1,000 guys on Robinhood come in and buy one contract each, right? Because they read something on a website, right? And they copy traded an idea. Okay. What does he do? They buy the stock. The stock's trading at 200. So they buy the stock. They short the 240 strike calls. They've got $40 as a covered call and $20 as the option credit. Okay. It's free money. Free money, guys. For the market makers, that's the easiest layup, low-hanging fruit business they will ever do. So why do you think they love Robinhood and Wall Street Bets, guys? Because it's free money. It's free money. Okay. Do you think it's a coincidence that in the last 5 years or so, this has been the predominant online push where there's an entire Reddit community of people that get sucked into doing these trades all the time? It's literally fucking financed, guys. It's financed media. Okay. It's for the morons, right? This is billions of dollars of business that gets done every month. Okay. It's free money, low hanging fruit. Now, what do you think happens to the market makers when we put a position on? So what are we doing? We're buying the 210 calls in December and we're shorting the 240 calls, the ones that the market maker would love to short to retail morons. We're shorting the 240 strike calls in October. What happens if the market maker takes the other side of that? Think of their position on the other side. What's their position on the other side? Their position is they're now short 2 calls of the 210 strike, the $210 strike calls in December, and they're long 1 of the 240 strike calls in October. So what do? What can they do to hedge that position? What can they do? Well, the best they can do with the short is what one of the guys said earlier, is to try and buy the contract back as quickly as possible, right? But unlikely that they're going to make any money, okay? Or what about the long side? So don't forget, if I buy the $210 strike calls in December and they short them to me, what are they trying to do? They're probably going to buy the stock at 200, right? They're probably going to buy the stock at 200. But here's the problem. If they buy the stock at 200, they still have to deal with the one contract at the 240 strike that they're now long. Sorry, they have to sell that contract, right? Because they're now long. So they have a long contract at the 240 strike and they're long stock and they've got a covered call position. So they have a covered call position, long stock at 200, short $210 strike calls in December. And then they've got one contract that they're long at the 240 strike. And they have to try and sell it for the same price or higher, right? Okay. The point is that the retail trader Robinhood business is free money, low-hanging fruit, easy business, stupidest clients ever for the market maker, dumb money. You might as well go round to the market maker's office at the beginning of the year, January 1st, and just write them a check. What we do is the opposite, right? We're doing what the market maker wants to do and dumping a position on them that they don't want to have. So we're basically the annoying client. We're the annoying client. So when we look at this question here, what is the best way to create wealth in options trading? The best way to create wealth in options trading is to have great ideas and trade directionally, but dump the bad positions on the market so you can have the good position. So it's about learning how to generate awesome trading structures where you have the probabilities in your favor and the market has the probabilities against them to make money out of the position. Okay. Now, what's interesting about that, we get the agnostic, the risk profile of that trade. We get the agnostic setup. But what happens on the other side? On the other side, they're not agnostic. They really care about what happens. They really care about what the stock's going to do, right? We don't care between now and October. They need it to go up, right? They absolutely need it to. They need to buy stock and they need it to go above 240 because they're now long that option at 240, right? In October. So we're dumping a bad position on the market, and the market makers hate it. They hate us. So when 1,000 guys on Robinhood show up and they buy a 20% out the money call option that expires in like 8 weeks time, okay, they love that shit. That is layup business, low hanging fruit, beautiful, right? When a whole bunch of guys at ITPM show up and they trade a calendar spread in a particular stock and 1,000 contracts trade, they absolutely hate it. And the conclusion to that is good. Good. That's exactly how it should be. So don't make shit prices to retail where you're selling the $240 strike call in October at $20, hoping that Robinhood guys show up, and then we join you and short 1,000 contracts to them as well, and then complain about it. You made the market, so we're gonna go into the same market that you're creating, and we're gonna short the contracts alongside you. So this is the way to think about it long term, guys. Like putting the odds in your favor as an options trader to make money. Imagine like your account is just full of situations like that. You're going to have lots of winners, lots of losers, but overall you come out making money. Martin, so that was a long-winded answer, by the way, but you should learn a lot from that. But this question, like I said, on the surface, it seems like very generic and innocent, right? But actually there's a lot of thought behind it. There's a lot of things going on behind it. Oh, what attributes must you possess? I mean, you've just got to understand how it works, right? It's education. There's so many different types of people at ITPM that have got very, very different personalities, very different backgrounds, very different careers. There's no one type of person. There's no like particular attributes that you have to possess. It's about education and understanding it. And then I would say the most important thing is showing up consistently. What is your most effective, routinely used technique with the best returns? What I just explained. What is your preferred trading strategy? What I just explained. Do you use predicting models in your analysis? Yes, the model is in. We're not a quant strategy. It's discretionary. So it's a discretionary process, discretionary model. How do you recognize opportunities and how do you refine ideas? I mean, that's all in the online programs. Unfortunately, I can't tell you exactly what's in the programs. What's your strategy which you suggest for retail traders? Exactly what I just went through. How to do macroeconomic top down. I mean, there's the first 14 videos in our online program, the PTM, explains it all. What do you think of the Greeks in options trading? For retail traders, directional traders, not that important. We're trading direction and we're just outright directional traders. So we don't hedge in any way. We don't need to worry about the Greeks. We hardly ever look at them. I mean, of course, we'll look at volatility and we look at like how much extrinsic value we're paying for an option and how much theta is going to kick in at a certain time. But the way we set up our trades, we take that into consideration, That's why we trade spreads a lot, because the spreads basically bring back theta. We pay for our theta bill, or a part of it anyway. We try to get us a good portion of our theta bill paid for up front. But yeah, the rest of the Greeks, delta, gamma, not really an issue for directional traders. This one might be too long. I might have to skip over this one. Tell me your journey, how institutions do trading. Well, how to develop edge. Okay, actually, I can answer this one quickly. I mean, don't need to go here. Tell me your journey. How institutions do trading. Well, look, the way I just described how you set up long short equity options portfolios for direction, that's how it's done at hedge funds. It's just done on a bigger scale and in more complexity, right? How you trade, same way. How much time? 1 year to 18 months. How to develop edge. Okay, well, that's probably the most insightful question that I can answer within those five. How to develop edge. Our edge is fundamental. Okay, so what's going to happen if we're taking fundamental ideas and we're taking really sexy option structures all the time with the odds in our favor? What's going to happen? The market makers, the guys who set up the options chain, the market itself, right? They are pricing options on a model, essentially, a very linear model, a volatility curve for the market and for the sector and the stock itself. Okay. Now, obviously, positioning comes into that as well. So if they see lots of buyers of call options, there's going to be a skew towards call options. If they see lots of buyers of puts, they're going to skew prices away from puts. So there's positioning comes into play. But essentially, they are pricing the market linearly. So they're not taking into account the potential impact that fundamentals have that we know are going to move the stock up or down with a high probability in the next 3 months. Okay. This is where our edge comes in. So our edge is the difference between the linear pricing of options on the vol curve as set by the market, okay, versus the fundamentals that we've recognized that are going to move the stock in the direction that we believe it's going to move in. Okay. That's where our edge comes in. So we make that gap, we make that money. Okay. That's what we take out the market. So when you see, for example, like the Thailand mentoring program results, and you see at the bottom, $3.5 million was the students' money at the beginning. And then we take $1 million out of the market. That's where the million comes from. It comes from that edge. The market makers aren't looking at fundamentals, or they underestimate the impact of the fundamentals. That's probably a more accurate way of describing it. Okay, ITPM admin. So these are more like admin questions. Okay. I'll run through these quickly. Can it be enough for me to trade just taking the PFTM? I mean, yes, but you're not going to make consistent returns out of just trading Forex, unfortunately. There's not enough opportunities. Much better to trade stocks and options. Anton, the current courses at ITPM seem too advanced. For who? They're not. You've just seen evidence that lots of retail traders who haven't traded before make money when they learn ITPM stuff. So I wouldn't sell yourself short, and have some confidence in yourself. Will you ever offer a course on futures and options on futures? No. What's the minimum budget for someone to open an option account? 25 grand in your account. When you trade full-time using ITPM method, grow your portfolio beyond the adequate size, increase the amount of trades. How do you pay yourself and still manage your equity curve? Try not to pay yourself is the answer. I mean, there's successful guys in ITPM who have paid themselves money, but they just stall their development in getting richer faster, right? Hi, Anton. I only have enough capital for the online programs as well as 25K for my trading account. Would you suggest to self-implement before getting a mentoring program? Yes, self-implement if you've got that amount of money. You're obviously not ready to do a mentoring program. You can get success. Don't worry. Plenty of guys get success by not doing a mentoring program. Just takes you a bit longer to figure it out. Why don't you guys trade FXs frequently? Because there's less opportunities. If there were more opportunities, of course we would trade it and make lots of money from it. And it might seem to you that there's lots of opportunities in FX because you read about it in the online all the time and whatever, but you're reading about the same currency pairs all the time, right? So there's not that many opportunities. In your experience, when it comes to trading strategies, do successful traders lean towards short term? No. Or longer term? Definitely weekly, monthly windows. How do they decide on rebalancing frequency, position concentration? Yeah, that's not really an ITPM admin question. I'm not sure why that ended up there. Thank you to all the mentors running webinars, much appreciated. After finishing PTM and options training courses, would you recommend doing a mentorship program straight after? Or should have had a number of trades? I mean, if you can do it, not like the previous guy where he doesn't have the money to do it. If you have the money to do a mentoring program and it makes sense for you to do it, definitely do it. But if it doesn't, then don't. Just wait. Implement yourself. Do you have places for Q4 2025? Yes. Realistically, is there enough time? Yes. But you better get in quick. 2 months is fine. Like you can start towards the end of October. 2 months is fine. So you can start towards the end of October and run it up to January. Options trading the only way ITPM teach? Well, we're not going to teach you an average or shit way. We're just going to teach you the best way, right? We want people to come to ITPM and succeed. We don't want you to come to ITPM, pay us, and then you've got a low chance of success. We want you to make money, okay? The 100K model portfolio on ITPM Flash suggests 10 positions at 5K. No, wrong. You're not understanding that. No one said that. What do you do with the, so basically like the typical situation is that you're going to have a long spend limit. So the long spend limit on a 100K portfolio initially would be about 7.5 grand. And then you try and collect a credit against the 7.5 grand. So it's not a 5K max spend. What do you do with the remaining capital? Well, if you've got 10 positions of maximum 7.5 grand long spend and credits, you're probably going to have about, short credits, you're probably going to have about 25, 30 grand of capital left, okay? That is in reserve in case you need to use it for various reasons, okay? It's more to do with risk management, okay? But most of the time, you basically just leave that 25, 30 grand. Looking to attend Thailand for one of the meetings. Great. Send a message through the website. Do you know roughly how many of the students that complete a mentorship go on to be statistically significant and become able to trade by themselves? Like I said, the ones that carry on and the ones that continue to show up and do it, very, very high percentage. Very high percentage. About 70% if you continue to show up all the time. But obviously, we can't legislate for the guys that, in month number 5, 6, 7, they just stop, right? Because if they'd have carried on, they could have been really successful. Super excited about the POTM. Tell us some more about it. Sneak preview. Well, actually, on the previous slide, when we talked about strategy, when we talked about that option setup, that is like all the way through the video series. So I'm literally sitting in front of my screen with like the headset on here, taking you through all of those strategies from start to finish. Okay, so you got your sneak preview already. Is it reasonable and achievable to generate 30% plus returns as a trader once completing the mentoring program? Absolutely. 30% is the lower end of what we would expect from someone who knows what they're doing. Still running the POTM2 early bird special. Yes, you're going to get an email. Don't worry. What is the path to becoming a portfolio manager at your company? Well, you want to become basically what a junior trading mentor is, right? That's the best thing you can hope for as a student coming into ITPM. So if you want to become what we call an institute trader, that's all very easy. Very easy is to do the online programs, put money in a trading account. That's how you become an institute trader. Okay. But if you're talking about like joining ITPM as an ITPM mentor, then you need to be doing that for at least a year, 18 months, and then making a lot of money and implementing the strategy like really well. Doesn't have to be perfect, but just really well. And then you'll be considered for a junior trading mentor position. And I'm definitely hiring more junior trading mentors. I think this is the way forward. Like the connection between senior trading mentors, junior trading mentors who are former students who have been through the whole process and totally understand all the challenges, and those guys sitting between senior trading mentors and the students themselves, it works unbelievably well. Like the results are so good right now. Like they've had a massive impact on the results. So yeah, if you wanted to become a junior trading mentor, that's what you have to do. Are there any option structures you use? Doesn't depend on market direction. No, zero interest. That's how small money is made in options. So that's large risk, small money. We like to take small and controlled risk with massive upside. That's directional trading. That's how the big money is made. So we like the big money. Call me old-fashioned, but I like to make big money. Since the beginning of ITPM, how many alumni had started with less than $50,000? Fucking hell, I don't know. Loads, hundreds. And how many have successfully traded up to where their portfolio is worth 7 figures? Quite a lot. I can't say exactly on here. I don't have the numbers in front of me, but it's quite a lot. The majority of people, by the way, start with less than $50,000 at ITPM. It's just our average gets to about high 60s because people make money. So their account value goes up. What is ITPM plan for the next 2 years? I'm not going to tell you everything, but we've got some fun stuff happening. Definitely more junior trading mentors. I'm meeting up with people in the US to discuss some plans about how we're going to scale up and make it better. But yeah, like all in the spirit of education and building infrastructure that works. So, I'm not into scaling something like ITPM and then the success rates go down. I want to scale and the success rates stay the same or better, which means you've got to build infrastructure alongside all of those traders as you scale to make sure that, trader 1947 gets as good infrastructure and education and has as good a chance of succeeding as trader 59 that came in, right? Like it's got to be done in that way. Otherwise, what's the point in scaling it? It'll just get out of control and then students won't make money. Where to start when trading for the first time? Just get yourself our basic online programs, the IPLT video series. Start to understand financial markets, then graduate through the process. Is there a date for the 2026 reverse Thailand training? Not yet, but there will be one. We'll launch it later at some point later in the year. Like I said, guys, I can't really answer alumni questions because we just don't have time. Career questions. Here we go. Let's see if we got some time here to go through these. I'm a physicist turned software engineer, 16 years experience, small scale crypto experience. I'm studying trading and finance, transitioning into quant. Been learning about ITPM through your free content. Appreciate it. Okay, I'm not sure what the question is here. Okay, no question. But I would say this, seriously question doing that in the next couple of years because AI is going to take over. So I would put a big question mark over whether you should be spending your time going into quant, full stop, unless you're one of the guys building the AI agents that are going to outtrade all humans and outtrade all the other algos as well. I'm curious how you initially learned to trade. I mean, my background, I was just punting when I was like 16 to 20. And no, yes, I've heard of DMARC, but no one uses them on the institutional side. Of course not. Yeah, my background, I was just punting between 16 and 20. And I was kind of in the right place at the right time as well, you know, like with the dot-com era, dot-com boom. So it wasn't that difficult to make money. It was, you know, just buy any stock that's on infinite times earnings, which has a .com after its name, and you're probably going to make money out of it. I mean, it was that crazy, right? So I would, you know, put positions on in the morning, go to lectures for 4 hours, go back to the computer room at lunchtime, and I'd be up a few $1,000s, trade out, go for lunch, go back to lectures, do it again later in the week. It was like, it was fun, but crazy, right? I only started really learning about it properly when I actually went into Goldman Sachs. But yeah, like, you know, just learning how to use a trading platform, taking risk, like learning your strengths and weaknesses. You know, I had a decent idea before I went into working for Goldman. Electrician. What skill would you recommend I pursue and become more value? I mean, just learning how to do this properly and becoming consistently profitable, right? That's the most important skill, okay? This is a big one. I'm a multi-millionaire, liquid, zero debt. Nice. What are the positives and pitfalls when looking for a wealth management advisor? How do I best get educated, mentored to structure your wealth? Do you have any people or companies? My goal is to go from high net worth to ultra high net worth. So $10 million plus to $30 million plus. See you in Newport. Yes, I think that's probably the best time we have that conversation, not here. So, yeah, I'll see you there in a few weeks. What's your biggest piece of advice for a person going to intern on sales and trading desks and trying to get a full-time offer? Ooh. So you're going to be in an investment bank on a sales and trading desk as an intern in 2025, and you want to go and start there in 2026. Biggest piece of advice: consider not doing it. Maybe go there for the experience, for the internship, but really spend your time trying to make connections at hedge funds. Maybe it's better just to go straight to a hedge fund these days, because you're just going to be an order clock at an investment bank now. You're not going to be taking any risk. So next question, pretty similar. If I'm a student, do you advise me going to an investment bank to learn the industry? It's fine to go there for a year or two. I wouldn't go there for a career anymore. Is taking your course something that would be more beneficial for me to be able to work a position at a firm if I wanted to in the future after showing a track? Yeah, track record is so important now, guys. Like, if you've just got to show an ability to take risk and make money, okay? You stand out head and shoulders above every other graduate if you've done a good degree and you've done that on top of doing your degree, because the vast majority of people just won't do it. And just think of all the idiots in the market where it's like, okay, you're doing a degree at a second tier or third tier school, and it's a shitty degree, and you've just graduated, and like half of your degree you did your exams, like, or half your degree you did using AI. Like, it's just, and then you get into the interview now, and the private sector guys at hedge funds, guys at investment banks aren't stupid. They're going to figure out if you just did your shitty degree using AI, right? And they're going to assess your ability to think critically. And within 20 minutes, they'll know if you've got a brain or not. Okay. Now, if you've got a decent degree from a decent school, and on top of that, you think critically and you've got the ability to take risk and make money, you stand out head and shoulders above everybody else. So yes, a track record of success is important in trading before you even apply for these jobs. And then, yeah, Brian, advice on young people trying to be a trader. That would be exactly my advice. Okay. Right, let's go for AI here. Everyone's asking, and you should be asking, how do you use AI? Should I be using AI as a trader? Yes, you should, but not in the way at the moment that you think you should. Really, at the moment, it's just a shortcut to getting information. You need to know a process of how to make money. AI is not going to tell you how to make money, okay, as a trader. What it will do is help you with your process. So it's going to help you if you've got questions and you want to get quick answers. But obviously, you need to know how to prompt it. So it's like, in the early days of search engines. So like if it was 2003, 2004 with Google, right? Obviously, back then, search engines were massively underutilized by the public. Why? Because you don't even know, no one knew what it was. No one knew how to use them, right? No one knew how to prompt them, right? So now, 20 years later, what are people struggling with now? They're struggling with figuring out how to prompt to get the right information and to get pertinent information that's going to help them make money. Okay. So just practice and practice and practice. Knowing the process right now is very, very important, but knowing how to prompt AI saves you so much time. Yeah. So like there's a lot of our alumni in the comments here in the Q&A area making comments about like how they use AI to get quick answers, and it's cutting down their time to process trade ideas by a huge amount. So yeah, I know you've asked all these questions, but that's probably the answer to the vast majority of what you're trying to get at here with your questions. Okay, a bit of fun at the end, guys. What do we reckon? Alexander, who shouldn't trade? Okay, I'm gonna put that question out to you guys. Who do you think should not trade? Let's have some answers in the Q&A area, please. What do we reckon? Who shouldn't trade? Okay, so there's lots of questions here about, lots of answers about IQ. Yes, I agree. So there's a few replies here about low IQ people. So IQ of lower than 85, risk averse people who are afraid of losing money. Yes. Simon from the BBC show. Yes. Bottom feeders, nugget hunters, those with impulse control, those with trouble with impulse control. Correct. Degenerates, retard gamblers. The guy with 15K in Bitcoin who's got financial expertise. No, he just needs he can trade. He just needs to be educated more. Excitement seekers. Yes, the gamblers. Simon from $1 Million Traders. Yes, correct. Jim Cramer. Correct. Okay. Yes, Anton at 16. Correct. I probably shouldn't have been trading at that time. So I think you got your answers there, guys. I would have said pretty much the same thing. Ali, how do you stay so young and handsome? Having fun, getting lots of good sleep, and staying involved regularly with the ladies. That keeps you young. Not a question. Okay. You've woken up because of ITPM and want to do a mentoring program in Q1 26. Perfect. Well, we'll see you soon. I'm from the UK and looking to relocate. If you had to choose a country in Europe to move to, where would it be and why? Ooh, does it have to be in EU? Does it have to be Schengen? If I had to move to a country, possibly Montenegro, possibly Italy. I mean, being very realistic with my own situation, if I had to be somewhere, I'd want to pay much less tax than most Europeans, right? So it would probably be Milan, Lombardy. They've got a deal on where you can pay a maximum of 200,000 euros per year in tax. So if you move there as a ultra high net worth, you can pay maximum 200,000 euros in tax per year on worldwide income. Or even, I think it's local income. So if you just repatriated money into the country. So if you bring like €1 million in, you pay 200,000. If you bring 2 million euros in, you pay 200,000. If you bring 10 million euros in, you pay 200,000. So yeah, not bad. And obviously it's close to a lot of things. But yeah, if you're starting out with not much money, then you'd want to go somewhere cheap, fun, relaxed, away from the socialism. So probably somewhere like Montenegro would work. Douglas, how would you recommend getting your kids exposed to trading? For example, if there was an Anton 101 in grade school, what would the curriculum look like? What would you focus on? Psychology, for sure, in the beginning. Getting the kids' heads right for taking risk. And I would be very careful with how you get kids involved. So, for example, like there was a guy on Twitter X the other day, and I saw his post, and he was like YOLO trading options with his like 11-year-old daughter and teaching her how to trade. And he set the expectation with his daughter that she was going to make 100 grand and pay for her college. So it was basically her college fund. And here's the thing, it's like, it's obviously not really his daughter trading, it's him. But he's probably allowing her to have some input, right? And that is a really bad way of introducing kids to trading, in my opinion. Because he was saying basically they put like 5 grand in a trading account and she'd made like 11 or 12 grand or something. And he was like, we're well on our way to the college fund. And I was just like, okay, what are you going to do if you actually blow up? Like, he obviously hasn't thought this through properly. You're just going to absolutely wreck the confidence of your daughter. And she's going to be devastated that she doesn't have a college fund. It's like, I mean, talk about bad parenting. So that would be an awful way to do it. She'll be scarred for life. Right. So I wouldn't do it in that way for sure. I've got friends who are in the industry who like start off small accounts where, you know, they teach their kids about risk and how to go into things, how to deal with losses. Like how to deal with losses is a much more adult parenting approach, in my opinion. And making them understand that it's a game of probabilities, teaching some basic statistics. And so they understand that losing is part of the game. Okay. And that, you know, if you make money and you book 3 trades One can be a profit of $1,000. One can be a loss of $2,000, and one can be a profit of $1,500, and you make money. And that's the game. Overall, you're making money. You book 2 winners, 1 loser, and you make money. And losing is part of the game. And you've got to make them really understand that and be psychologically prepared for that, right? And that, obviously like spills over to other areas in life as well. It's like you don't have to win at everything. You can lose consistently. But as long as you're booking slightly more winners and more money on your winners, or you're making progress in life overall, then that's what matters. You're going to take losses all the time. It's being comfortable with the psychology of that. That's how I would teach the kids. And people are now asking me here, do I have kids? Yes, I do. I have 1 daughter. She's 15 months old. Right, so next. How would you if trading was a woman? If trading was a woman, how would you describe her? Okay. So looking at it through my lens is going to be very different from looking at it through a retail lens or someone who hasn't been doing it for as long as I have. Okay. Looking at it through my lens, how would I describe it? A chore, a job, something that I have to manage, something that I have to show up consistently to manage. So yeah, basically a bit of a pain in the ass, but enjoyable occasionally. So honestly, it's like we have this phrase at ITPM, and the guys on the Thailand program will attest to this. Okay. We say it in the classroom a lot, especially this year. I was drilling it into my classroom. You're going to get so tired of winning. It's like what Trump says, right? You get tired of winning. It becomes monotonous and a bit boring that you have to show up all the time just to book money, book money, book money. Because essentially what you're just a conduit. You're like a conduit or machine in the financial markets, just booking profit. That's what you end up becoming. So yeah, that's how I would describe trading if it was a woman. And yeah, Miguel, that's a good point. As a retail trader, Julia Roberts on Pretty Woman. That's a good description. Colin, absolute pleasure. I'm not going to read out your message there. Okay, next. If you had to start over from $0, what would you do differently to get back to your current net worth? Well, now we live in a completely different world, right? So now I probably wouldn't go to university. I'd start much younger and I'd go into business. If it was now, if I was 18 now, that's how I would start out. But if I lost everything now at 46 years old, how would I start out? I'd raise some money and go into business and do something different. So probably do something that's bulletproof, AI bulletproof. The best place to live as a retail trader on the planet, long term with family. Depends what you're doing, right? So if you're planning to trade, it's possible where I am. It's pretty hard if you're in New Zealand or Hawaii, right? The hours are just ridiculous. Even it's a bit difficult in Australia as well. But if you trade in the way that we do, Australia is handleable. You can handle it. We have lots of successful guys in Australia because we trade very relaxed. We don't have to sit in front of the screen during market hours. We put in a lot of the time what we call GTC, good till cancel orders. We have our levels and they trade overnight, and we can trade for an hour before we go to bed. We can wake up early and trade for the last half an hour. It's a very relaxed way of trading. So you can live in Asia, you can live in Australia, but I wouldn't live in Australia. It's like the UK with sunshine and beaches. It's just a socialist hellhole right now. So yeah, Southeast Asia, where I am, I think it's very, very good. But again, you want to be around like good infrastructure. If you're having family, good for schools. So good international schools, good hospitals. There's plenty of places in Southeast Asia. South America, possibly. There's some good places that are turning the corner, like Argentina, southern Brazil. Don't forget, like Brazil is a bit of a socialist hellhole on paper, but don't forget, it's the size of Europe. There's plenty of places to hide. You're not going to be found in Brazil very easily, right? Like, it's a massive, massive country. You can live a life and never ever bump into anyone, anyone important, that from government or the cops or whatever, people trying to shake you down. So yeah, you can live a very good life in a lot of these countries. Caribbean, good option if you've got money. Central America, good option even if you don't have money. So Mexico, Panama, you're on US time zone. Yeah, Stefan mentions Paraguay. I think if you're young, you don't have a family, it's a good option. I think I'd rather go there than Dubai, to be honest. I think it'd be a better lifestyle. Tomorrow's, you're saying UAE, okay, for a few years. I think you just get desert fever. It's just a crap and boring place to live. You get sick of it after a few months. Got to be around culture. Culture and community is what is going to keep you interested in staying somewhere. Is Singapore still a good place? Well, I was in Singapore during COVID, and the way they lied and cheated and gaslighted their population told me everything I need to know about that government. So they are not the same as the Lee Kuan Yew days. That period is well and truly gone. Okay, it's very different now, and they lie about a lot of their economic statistics. They lie a lot about their population stats. There's a lot of gaslighting and bullshit going on in Singapore now. It's nowhere near as good as it used to be. Now, is it okay to have a company there? Is it okay to do business there? For now, yes. But if they keep going down the path they're going on, then it's not going to be good 5-10 years from now. And I think AI is going to have a massive impact on Singapore, more so than many other cities around the world, because they rely very, very heavily on white-collar, useless jobs. So I think there's going to be a big unemployment problem there. So this kind of moniker that they've managed to achieve over the last 3-4 decades, the Switzerland of Asia. It's kind of like, being seen or as the AAA platinum place to do banking and business and whatever in Asia, behind historically Hong Kong, but Hong Kong's kind of gone down the drain now because it's China. I think they could lose that in the next 5 years. I think it's a lot less safe than people think compared to what it used to be. In what country are you in now? I'm in Thailand. I'm in Phuket, on the biggest island in Thailand. Okay, next question here. It's been 9 years since your 10 secrets. It's been longer, actually. It's been 10 years. This is year 10. September 21st is the official 10-year anniversary. If you must add one more secret, what would that be? And please explain in detail so that the global English community will understand. Secret number 11. Don't pay tax and don't get divorced. Okay, Raul. So here's my boy, Raul, top of my group. This is our man. up 40% in 12 weeks. How do you design a life that maximizes freedom, performance, and wealth compounding without burning out or becoming a slave to your own system? Okay, well, I would say there is levels to this game, right? So it's a lot easier to not burn out and compound if you get over the line with certain numbers earlier on in your life, right? So if you can get to 35, 40 years old, obviously there's no perfect time for this, but let's give a range, with a one standard deviation range around it. So let's say it's like 40 and then 35 to 45 is the range. If you can get there and have over $10 million, you've got a very good shot at making it big, right? Because then you've just got plenty of time to compound and you're going to have that freedom. So my advice would be, honestly, you've got to be prepared to sacrifice your 20s. People just start work and start building wealth way too late in their lives. I mean, when you look at like Europeans, when they go to university in like their mid 20s and they don't leave until they're fucking 29, right? Like by the time I was 29, I'd had a career in investment bank trading, right? I'd made a fucking TV show, traveled the world 2 times, and I'd been working from like the age of 11, just doing like jobs and summer jobs and odd jobs and businesses, saving money, right? Like, and a European these days starts work at 29. It's fucking mental. Like, how do you think you're going to save anything that's meaningful and get freedom and compounding kicking in when you start work at 29? Like, it's crazy. Like, I thought it was bad in my day when people were at university and they were 19, 20 years old and they're like, oh, I don't know what I want to do. So I just did a degree where, I don't know what I'm doing. It's just, to get a degree to fill in time. Right? It's like, okay, you're 20 years old. How do you not know yet what you want to do? Have you not thought about it properly? Like, so I think getting over a certain number by a certain age is very important for most people. I'm not talking about, someone who makes stupid amounts of money overnight. I'm talking about for the vast majority of cases. Okay. Your freedom and compounding comes by getting over a certain number by a certain age. And it's obviously, second part of your question here, without burning out or becoming a slave. I mean, that's what freedom is, right? You're not burning out or becoming a slave. So I would say get going as quickly as possible and sacrifice. Like, it's all about like long-term success for short-term sacrifice. Santiago, not a question. We, the people, want an Anton podcast. We want it now. I fucking hate the idea of doing podcasts. Do you not think I've been asked by some of the biggest podcasts in the world? I've been asked to go on them. I don't want to be that guy. I don't want to be that guy. The trader who goes on podcasts and is the talking head. Yeah, I'm sure it would be good for enrollments in the school. But then I'd just be the guy who goes on podcasts. And the thing is once you're on that podcast circuit, right, you have to come up with interesting stuff all the fucking time to talk about. This is what turning into a social media clown looks like, right? A jester that's there to entertain. You end up going down that fucking rabbit hole, right? When you think of like people out there who are quite famous, right, for just creating content, okay, what do they do in their lives? I mean, just think about what they have to do every day when they wake up. Their entire life and business operation depends on being viral all the time. Okay, so when they wake up every morning, they're sitting there thinking, how do we go viral this week? How do we do this? How do we do that? That is just a fucking shit way to live. And it's a stupid way to approach business. Because once the world gets bored of you, you're gone. It's over. And that's what your business depends on. That's what your life depends on. That's stupid. It's like this phrase that everyone uses now, creating slop, like what we call YouTube slop, right? It's like you can watch something for 20 minutes, half an hour, and you're just like, why the fuck am I watching it? I'm not even, there's nothing useful. It's just a conversation between two people about some random shit that has no impact on anything. It's not even interesting, right? That's what's happening right now. It's like people just make content for the sake of making content, and it's just slop. Okay, so I just don't want to be that guy. How to handle people who denounce or ridicule your belief in trading. I mean, who cares, right? Like, why would you care if some random person has a problem with you, like on the other side of the world, on the other side of a screen? They have a problem with you trading financial markets. Or maybe it's someone in your family. Who cares, right? How to handle it? Ignore. That's what you do. Ignore. Okay. Right, guys. So those were the categories. We managed to get through most of those categories. The general and answerable were just kind of like generic questions. I think I probably answered most of them in the responses. Let's answer some of these live questions here. There was obviously many coming through, but hopefully there was overlap, because I did spot some coming through where a lot of the questions that I answered, a lot of the answers that I gave will have overlapped to your questions. Mark, Anton, will you be at ITPM for many years to come? Yes, for sure. But my capacity changes over time, right? The more we grow and the more we scale, then my capacity naturally has to change. You know, like for example now, right? Like our mentoring programs have a curriculum, okay? It's a very defined curriculum over 12 weeks, and the mentors are all teaching it. But each week there's like hurdles and steps that we have the students go through. So it's very well defined. And like, 7-10 years ago, it was just me and a few mentors, and we had a good idea of what we were going to teach over the period, but we never had an exact curriculum that we stuck to. But now we do. So like my capacity changes, which means we can, because the curriculum is very straightforward for people who know what they're doing to teach. We can bring in more teachers like the junior trading mentors. Part, I think your name is. I hope I'm pronouncing it properly. When do you plan on retiring? Well, here's the thing, right? Okay, I had enough money when I was 28, 29, when I made that TV show, $1 Million Traders. Honestly, if I wanted to not work again, I could have not worked again. Even when I was like 28, 29. I could have just drawn down my money and lived a very good life somewhere. Or even just done something part-time and disappeared. What I realized was, when I went traveling, was that I spent a year traveling the world, and then I was on a beach in Brazil, and I've been there for about 6-7 weeks, and I realized that at the age of 28, 29, I would have to be doing this and sitting on my ass, bumming around on beaches with bums till I'm in my 80s, and then I just die. Right? Like, I was like, my brain is way too active. I just can't do that. So I just had a realization that shit, I probably can't retire ever, just because I need to keep going. That's just how I'm programmed. So will I retire? In my mind, I feel fairly retired now, right? Because I'm beyond the point where, well beyond the point where I need to work. So I just do it for fun. I do what I want to do, and I do it for my own fun, entertainment, and I really enjoy everything I do. Conrad, fun question. What product do you use to slick back your hair? uh, envy is not a good trait, Conrad. Try to eliminate envy from your life. um, honestly, it's just like cheap hair gel from like the supermarket or 7-Eleven. It's not even expensive stuff. When it comes to stuff like that, I mean, I just don't spend any money at all. I just keep it cheap and cheerful. Reserve me a spot under your name for the 27 Thailand mentoring program. Yeah, I don't mentor people directly for the 12 weeks anymore, but I'll teach you in the classroom. So I'm just going to be doing a lot more classroom teaching because that's how my time is much better spent in terms of the teaching capacity at the moment. And it leaves me time to concentrate on other things. Anton, where are you based now? Phuket, Thailand. Miguel, you're helping or educating a lot of people. Thank you. Pleasure. This is how we roll. You know, this is what it's like, guys. You know, linking this to the retirement question, right? When you get into a position in life like the one I'm in, where you're very relaxed about your position in life, you're comfortable with what you're doing, you're financially well off and comfortable, you can do things that add value to the world at no cost to yourself. Okay. So this is why I love what I do. It's a great place to be in life. Anton, will you come to Dubai? Would love to buy you lunch and pick your brain. Yeah, with a smiley face. You know I hate that. You know I hate that. My job is not to travel around the world and go for lunches with people so they can pick my brain. For someone who hasn't done much traveling, which country or continent would you suggest to start off? I would go to Central and South America. That's where I started. So depending on the time of the year, right? So if you're going in, say, June, start off in Mexico and go all the way down and end up in Argentina by December. 6 months. If it's the other way around, you're starting in December, January, start in Argentina because you're in the southern hemisphere and go all the way up to Mexico. Just zigzag across South America and go up to Central America. Why? Because you're basically just following the sun, right? Over 6 months, it's always going to be summer for you. They call it the Gringo Trail. So it's where the Westerners zigzag through Central and South America. That's a fantastic experience. Ches, you said if you wanted to start over again, you would go into business, a business that's AI bulletproof. Why not trade it your systematic process? Well, yeah, I'm talking because you need money to do it, right? So you need an income first. So you set up in business first, you make money, your business is successful, then you're going to use your money to do other things and invest and compound, right? Uh, nice one, Joette. Thank you. See you soon at ITPM. In 2026, are there plans to visit the UK or another European city for a one-day classroom, or failing that online? Honestly, like the UK for me now is a difficult one because, of course, I grew up there. I've got family there, but I don't. I honestly just don't enjoy going back to the UK anymore. Like, I wanted to go back after COVID, see family, do an event, keep up appearances. But genuinely, it's not like, a decade ago or 20 years ago. It's just nowhere near as enjoyable. And when you've got, a certain amount of time per year to travel, go on holiday, if you want to go places on business, it's dropping down the list rapidly, even though I'm a UK citizen. I'd rather not go back and go somewhere else. The opportunity cost is too high, right? It's fucking awful to go back. Is the schedule for Q1 2026 mentoring open? Yes, you can send a message through the website, itpm.com/trader-mentoring. Send a message through the website and they'll get back to you. Western Europe would be nice to come see you. Well, yeah, what part of Western Europe? Belgium? I've done a university tour in Western Europe, actually, but that was a long time ago, 2013. Any thoughts about entering politics? So little interest. So little interest. Hollywood for ugly people. It's all the kids that I used to throw scrunched up paper at the back of their heads at the front of the classroom when we were kids. I don't want to spend my life hanging around with those people. Melvin, why is Thailand better than Singapore? Singapore policies seem okay compared to Thailand. I don't know what policies you're talking about, but you get a lot more freedom in Thailand than you do in Singapore, that's for sure. Anton, why is your PC setup so cheap? What are you talking about? My PC setup is $25,000. I think what you'll find is what's inside the PC is more important. Anton, are there ITPM alumni meetings in Australia that bring traders together? Yes, there are. And if you were in the Discord servers, you would know that's the case, because we have rooms in the Discord for ITPM traders all over the world, split up by geography, and you can contact people and organize meetups around the world. Many people do. So yes, I would say get yourself into the Discord servers and you will be part of the community properly. How have the mentoring programs changed now that there are junior trading mentors? Okay, so before, if you were on a remote program, you will be speaking to your senior trading mentor every week, once a week, for about 2 hours on a 2-hour call. You go through all your positions, come up with a trading plan, go through all your ideas. Then in between, you would execute the plan, come back on a phone call a week later. You do that for 12 weeks, okay? You go through 3 options expiries, monthly options expiries. So let's say you started in Q4. You'd start at beginning of October, 3rd Friday of the month. October's your first one, your first options expiry. 2nd in November, 3rd in December. Then your program would finish at the end of the year, okay? So you'd have a gap of a week and you'd be on your own, working your plan, but alone. And then, so this is all over Zoom, by the way. So screen sharing, or you can do it on Google Meet, Teams, whatever. So how has it changed with the junior trading mentors? Well, what happens is before you even start your program, the junior trading mentors contact you and you have a session. You go through everything that you need to prepare properly. And then in between phone calls, so usually every couple of weeks, a junior trading mentor will be on the phone with you, showing you how to do everything. in between phone calls. So it's kind of like a support buddy. You have a buddy for support, and they show you how to do everything. Which is the most interesting quarter to do a mentoring program usually? I mean, Q4, Q1, Q2 is pretty good. Q3 is popular because it's summer and people are working less and they're winding down in the Northern Hemisphere, right? But Q3, you don't get as much volatility usually as Q4, Q1. When I mean volatility, like opportunities, things move, and they move in predictably fundamental directions. What if I miss a mentoring call? You have one grace call for the period. So if you miss one, then it's carried over. So if it's, let's say you miss call number 4, you don't jump to call number 5, you'll have call number 4 the following week. But if you miss 2, you lose a call. So basically, like the mentors just have a certain amount of capacity per quarter. It's usually 8 to 10 students per mentor. And yeah, you can't carry over to the next quarter or, suspend your program and say, I'm coming back in a year, right? We just don't do that. If you book a program, you've got to know that you're with a very high probability that you're going to actually complete it. In the mentoring, do I get support for all exchanges? I don't know what that means. We're on the New York Stock Exchange and NASDAQ, right? So we're trading options in the United States. I'm not going to read some of these questions. It's ridiculous. All right, guys, I think we are probably coming to the end of this AMA. What do we reckon? Any more questions? We can do a little run of questions if you feel like it very quickly. Last questions in. What would you do if there was a digital lockdown or cyber attacks? Go to the local gun range and get some weapons. Are you still doing long-short equities or only long-short options? Long-short options. That's what we're doing. Has the idea generation process changed at all since PTM2? No. Going to take the PTM exam on Sunday. Any advice? Just just go through it at a reasonable pace. Don't rush it. When will the next AMA take place? With me or one of the other mentors? I'm guessing you're asking for me. Probably not till next year. How's the recording or production of POTM2 going? Good. We've done the first 24 videos. In your opinion, is 1 million net worth hard to achieve for average student? It's only difficult in the sense that you are your biggest challenge, not the information, not really the market. Once you've got the education, and let's say you've done a mentoring program, okay, it really is, the success is really all about whether you just continue to do it and do it to a decent level of ability. You don't have to be perfect. There's so many guys in ITPM who started with like 50 grand or less, and they've made a couple of $100,000 in their first 1-2 years. And I go through their trades and their track record, and they're making mistakes all the time. So you can back out their mistakes and say, okay, what if they didn't trade in that way and they traded more in the way that they should trade? And they would have been up 300 grand. So they're making they're starting on 50, making 150 profit or 200 profits over the first year or two, and they're making 100 grand of mistakes. So you don't have to be perfect. You are allowed to make mistakes and not be perfect, okay? But what you're not allowed to do is make the same mistakes over and over and over again, okay? So you got to learn from the mistakes, and for you to become wealthy over 1 million in a short space of time, it can definitely be done. But the main reason why you wouldn't do it at ITPM is because you didn't stick around and show up for 3 years and be consistent. Like look at a guy like Phil, junior trading mentor right now. Okay, he started on just over 100 grand. I think it was 102 grand in his account in May 2022, and he's now above 700, and he's already taken out $190,000 from his account. So he had to pay some taxes, capital gains tax on profits in Germany 2 years in a row. He had to pay for his wedding and a deposit. He used some money for a deposit on a new property in Vienna, Austria. Right. So if he didn't take his 190 out, he'd be very close to 1 million now. Like I think he's going to be close. He's going to be he might be at 1 million by the end of this year. Right. But he's very consistent and shows up and trades. And now he's like gone from a 5-day work week to a 3-day work week with his job. And he's making way more money trading now than he's ever done in his career by an absolute mile. So yeah, it's all about showing up, guys. Once you've got the information and you know how to do it, it's all about showing up. Can you still do this if you take money out but don't have a mortgage or rent to pay? It depends. Like, if you're taking regular money out of your trading account as an income, you're just creating a headwind for your progress, right? Think of your trading account as a column, a wealth column on your balance sheet as a human being, as an asset, right? You've got to grow that column. And if you take money out of it all the time, you can't grow the column. That's how net worth works, right? You've got to grow assets. Is there any point being a billionaire? Well, at the end of the day, it's just an arbitrary number, right? 1,000 million. It's an arbitrary number, but it just gets assigned so much meaning, right? What is there now, like 2,800 billionaires on the planet? I honestly think it's massively oversold. Like, obviously, it's like this media creation where it's just an arbitrary number, but a lot of meaning is given to it in the media, right? I think really what you should be attempting to achieve financially is to be ultra high net worth. So try and be worth over $30 million. That's a much more realistic target, and it's very, very achievable. And honestly, if you're worth like 40, 50 mil, your life really isn't that different to somebody who's worth 200 mil. Really, it isn't. But if you're worth obviously over 1,000 mil, then life is very different. Okay. But the chances of that happening are very, very low. It's much more achievable to say, okay, I'm happy to be worth 30 mil plus at a good age with no real stresses. And I don't really want to, I'm happy not to own the jet and the boat. I'll just rent it. If you really want to own the jet and the boat, then you need to go for more. But there's about 500,000 ultra high net worth in the world, right? So 500,000 people worth $30 million or more. And 250 are in the US, 250 are outside, 70,000 are in China, but it doesn't really count. So that really only leaves 180,000 outside the US and China, right? But it sounds like a small number, but it's a hell of a lot more achievable than becoming one of the 2,800. So I think it's a very, very good target for most people because it's achievable. Some people are asking, why does China not count? Because if you're one of those 70,000 people in China, it's all paper, right? It's not real. You probably own a business and you're probably intertwined with the CCP in some way. And it's very political. And the CCP probably own 40% of your business. And if you try to sell your company or try to take your money out of China, you're risking your life. You could end up dead or in a gulag somewhere, right? So for the rest of your life. So for me, it doesn't count if you're worth over $30 million and you're in China, because it's just corrupt and dirty and illiquid. Would you ever visit China again? Zero interest, to be honest. I'd rather get a house in the UK. It's such a shithole. Right, guys. Hopefully you got a lot out of that today. Let's call this a night. Call this a day.